Good morning, everyone. This is Shawn Hackett, president of Hackett Financial Advisors, coming to you with a special interview today with President and CEO Craig Scott of Bion Fertilizers. Before we get started, whenever we do a podcast, what we want to make sure everybody understands this interview, this podcast is for information purposes only. Not everything that is said on this call will turn out to be true. There's always a great risk for loss in stocks, commodity futures, commodity options that can possibly even exceed your total original investment. You must always do your own due diligence and look at your risk profile and your goals and act accordingly. With that being said, Craig, thank you so much for being on the call. I appreciate you taking time out of your busy day. And maybe we can just start with a little bit of an understanding of who you are, how you got involved in Bion, and how you got to be the CEO today. And we can go from there.
Sure, Sean. Thanks for the introduction and the opportunity to tell our story. And frankly, that's good advice on the risk. If I don't make it clear in this presentation, this is a speculative venture, and you do need to evaluate the risks. We are a publicly traded company. Our filings are available as a public company on Edgar or on the OTC markets. We file, timely reports just like any other publicly traded company. So with that said, I've been with Bion for about a little over 30 years. I was for a long time in a very comfortable position where I dealt with our shareholders and our investors and, investor relations and those kinds of things. But recently we faced some challenges that included the death of our long-term leader and CEO, Dominic Bassani. The guy that we thought was going to take us to the next level really proved not to be up to the task and left. And I stepped in because I've worked with these shareholders. We have about 1,000 of them. Half of those are very active. And I felt like we were so close to the finish line that it was important that we stepped up with some continuity. So that's how I wound up as CEO. I'll just tell you this, 30 years ago, Bion started out with a mission to clean up livestock waste. We built several fields of dreams in the biological treatment space. Unfortunately, nobody came because there was no mandate to clean up livestock waste. We can talk about those policies all day long, but suffice to say, the actual, being forced to clean that waste stream up has just never come to fruition. So we built, again, several fields of dreams that nobody came to. They worked beautifully, don't get me wrong. We made wonderful fertilizer products. We solved big environmental problems, but again, no mandate. So fast forward to today, we kind of got lucky, Sean. We have a technology that flowed from that mission that essentially we focused on nitrogen and ammonia because that's really what drives the problem here. Phosphorus is a problem, but what really drives treatment costs and particularly coastal water issues and groundwater issues that we have today is nitrogen. And that nitrogen is able to spread very easily because it comes out in the form of ammonia. And ammonia is very volatile. It transports easily. It wants to volatilize to atmosphere. It causes air pollution. It causes groundwater pollution. It causes coastal algae blooms. And it's a problem. You know, ammonia and nitrogen are the fundamental building blocks of life, but if uncontrolled, they really do cause a number of problems. So that's really the mission Bion always had. And we got lucky in the fact that as the renewable fuel space has grown up, and by renewable fuels, I'm talking about biogas made from, say, animal manure or any other organic waste stream that's upgraded to renewable natural gas. In that process, the ammonia, the available ammonia, is actually increased by several fold. So now you've got the unintended consequence from this biogas production of creating all of this ammonia. That again is a real environmental liability, as well as the fact it's a waste of resources, because that's a gaping hole in the nitrogen cycle. And Bion set out to figure out how to capture that ammonia and stabilize it and best use it. What is its best use? What is its most value? And what we determined was that we could stabilize that ammonia with the carbon dioxide that's also in the waste stream. So we haven't added any chemicals. And as a result of that, we have an OMRI listed organic soluble nitrogen fertilizer that has many of the same characteristics of urea, but is certified for use in organic production. And that's a game changer because the organic industry deals with what's called the yield gap. I'm sure your
Yes.
listeners are well aware of that yield gap. That yield gap is because a soluble nitrogen source has not been available. So this is really a new product. There's a little bit of controversy over its introduction between the organic purists and the the guys that really were interested in taking organic to the next level. But at the end of the day, these products are now they are cleared for use. We believe that we are going to be the low cost supplier of that soluble nitrogen. There are other products that will hit the market, but we believe that because we have the ability to stabilize with that carbon dioxide, which is essentially free, that we can be the low cost provider here because others are going to be starting out with that ammonia water, if you will, and they're going to need to stabilize it somehow. And you can do it biologically. It's expensive. It's very intensive biological treatment, like a municipal wastewater treatment plant, or you can stabilize it by bringing in an outside organic acid, and that's just expensive. So we think we're in a really unique position to not only solve the pollution problem associated with renewables and livestock production, but also recapture that value, upcycle it, and create revenue streams that were previously unavailable. So, in a few more than 25 words or less, that's where we wound up. We pivoted from trying to build and develop very large scale livestock facilities to just becoming a bolt-on solution for other people's problems. And frankly, I find that business a lot easier to deal with. And we've had some real success here lately in demonstrating that value proposition to these biogas producers.
Can you discuss a little bit the patent portfolio side? How I think you broadened that patent ability a little bit. I think that's important to understand the potential competitive advantage you have for this process that appears to be giving you an edge on costs.
Yeah, we do, and I'm glad you brought that up. We essentially developed the technology, and the patent portfolio was around animal waste. However, about 2 years ago, we got that patent expanded to industrial waste, which now consider a point source polluter versus an agricultural non-point source polluter. But that patent coverage was expanded to any organic waste stream, municipal wastewater treatment, industrial, food waste, take your pick. We now have the ability to control that entire organic biogas space in that we use the patent comes back to using the carbon dioxide to stabilize the ammonia. There's a lot of ways to get to that ammonia, Shawn. I want to make that clear. We have some proprietary technology that we think does it the best with animal waste, but there's a lot of ways you can separate and concentrate ammonia. The key to Bion is the ability to use that carbon dioxide.
And so, in just looking at some of your public disclosed information, it does appear that you had given samples out to some of the fertilizer producers to have them kind of tested and take a look at it, and what was their reaction, or what were the conclusions from those discussions?
Well, we've had, again, these are new products. They've never been used at scale. And in fact, a lot of the distributors and farmers are a little skeptical because a lot of people have made claims to be able to produce these products, but they haven't been able to deliver. Either their technology has failed, it didn't scale, Omri didn't give them the listing, lots of reasons for that failure. But where we are today is we are now producing small commercial scale of the fertilizer products. And understand this is a liquid product. It's sold in gallons as a 1000, 900, 700, whatever they're looking for. But at the end of the day, we are now shipping samples and have been for several months. And we have sent samples to a number of different organizations, from academic to private companies to blenders to direct use. And the results have been positive. Like Jeremy Rowland, our chief scientist, likes to say, nitrogen is nitrogen. It's all about how you deliver it. And frankly, our product, which is ammonium bicarbonate, which is what happens when you put, excuse me, when you put carbon dioxide together with ammonium, it's been used before. This is not a new type of fertilizer. In fact, it's still used in China, a lot in rice production. But it's really about how we produce it and how we keep it organic versus being a synthetic. But at the end of the day, again, nitrogen is nitrogen. We have a number of people testing that product or have tested it. We have initial offtake agreements from some very large, well-known distributors, performance, or excuse me, Yield RNG. We've got Perfect Blend. There's been a couple of other ones that have not really wanted to disclose their names, but they are national names. And at this point, we are now trying to nail the other end of the supply chain down, which is the production of the feedstock side, if you will. And it is a chicken and an egg problem. We've got to nail both ends of the supply chain down at the same time, because there is no existing market here where we can just come in and skin the cat a little better. We are establishing new markets here, new supplies, and there are some challenges associated with it, but it's very exciting because it is new. And what we're finding is, again, more and more on both sides of that equation, we're being recognized for having the best value proposition available for recovering that nitrogen.
I think I read somewhere that you were going through an optimization process and found that the I'm trying to remember exactly, like the energy or the cost were less than you originally had anticipated. Maybe you could explain that a little bit, but it was actually better than you thought in terms of the process.
Yeah, that was a really, really pleasant surprise, Sean. We originally thought, because what you have to do is, because you have all the solids in that waste stream that come with a manure, you've got to separate that ammonia from all those solids, because the idea is to eventually concentrate that ammonia. And if I've got all those solids in there, I'm going to clog up my distillation column when I go to concentrate it. So that's why we use evaporation to separate the ammonia. And during that process, we evaporate water along with the ammonia. At first, and that's what drives your cost. At first, we thought we were going to have to evaporate half the water. Well, it turns out we only have to evaporate a third, which means that our production cost is a third less than what we thought it was. That's a significant difference. In my opinion, what's going to win this race, or not win this race, but the dominant supplier is going to be the low-cost supplier, in
Sure.
my opinion. Again, nitrogen is nitrogen. It's all about getting it to the roots of the plants. We think we're going to be able to do that more affordably than anyone else.
Now, maybe switching subjects just a little bit here. Can you discuss a little bit about, I think you've done some convertible notes or something with shareholders to do some short-term financings. Can you kind of go over a little bit of what that's going on and some extensions? It's just, I think it's important to know, like, where are
Yeah,
you at with
yeah,
that
it
sort of
is.
thing?
It is. I mean, this is, to me, this is the important part. This is the challenges that we faced with Dom's death and, our other CEO, riding off into the sunset. They really walked out leaving, spending our last nickel. And what I've been able to do is step in and get our shareholders to keep us dancing, if you will, until we can get to these first projects. And they have been wonderful. For about a year and a half, they have kept us on life support. I like to say we've kept our nose above the swirling drain. But it really was, what you'd call a near-death experience, and our shareholders have kept us afloat. We have been financing our operations with a note that's secured by the technology and pays a reasonable interest rate, but it's all going to convert. It's going to convert at the price that we recapitalize the company at. And we're getting ready for that. We recently completed a restructure of the capitalization, the capital structure, if you will. Our legacy insiders had some really complex, convertible notes, derivatives, this, that, made it very hard to value the company. We dialed all that back. We pulled all those complicated instruments back, did a settlement. We essentially pulled back about two-thirds of their position. So we substantially reduced our market capitalization at the same time we simplified it. So we're getting ready for the big dance. You got to put the lipstick on and the pretty dress, and we're doing that. We've got some issues that we still need to get cleaned up, but we've recently become associated with a very large private equity fund called Kimmeridge. And Kimmeridge is a $6 billion fund, very bright guys that are in the energy space. They're focused on energy, and they've always been focused on, well, more recently on LNG, and they've been more and more focused recently on renewables to balance that fossil portfolio. So Kimmeridge is very forward thinking, and they're looking at full resource recovery on these organic waste streams. And they've recognized that, again, that value proposition that Bion brings is the best one out there for that ammonia side of that recovery stream. We're working with Kimmeridge very closely on a large RNG product or project. We've had to be very vague. The project has not been announced yet publicly, other than Bion's announcement that we're working with Kimmeridge on a unknown or project. So, as that project gets closer to what's called final investment decision, I think we'll be able to talk more and more about those details. But, suffice to say, Shawn, there's an old saying in private equity, they don't do deals that don't move the needle.
Yeah.
This is a $6 billion fund, and that saying holds true. So you can assume it's a big project. You can assume they've done some due diligence on the technology. You can assume that they've done some due diligence on the fertilizer markets. And, again, you can read about that MOU, that memorandum of understanding we have with them, but there's some binding parts in there. They're already starting to spend some money on us and our technology, and we really look forward to moving forward with Kimmeridge. We think it's a great opportunity for them and us both to really, best monetize that waste stream.
Do you foresee other? Are you having? I mean, do you foresee other uh, similar type arrangements with other entities you're speaking with? I mean, are you actively engaged in looking at other opportunities beyond Kimmeridge?
Yeah, we're looking at a half a dozen of them seriously right now, where NDAs have been exchanged, and we've got data, and we're working up proposals in various stages. But yeah, we're looking at everything from industrial food scrap only waste to food processing waste, slaughter waste, alongside animal manure, because we think it's very important to diversify that feedstock. I mean, let's say that, some of these guys, like their technology only works for dairy, or it only
Hmm.
works for poultry, or it only works for a very narrow slice. What happens if, let's say I'm in poultry and bird flu comes through?
Yeah.
And now all of a sudden I can't deliver to a farmer that's counting on his fertilizer that spring. So we think it's very important to diversify those feedstocks, and we are very actively pursuing opportunities outside of this large one. It's not a silver bullet. This is going to take broad application here to solve, first of all, the environmental problem from livestock waste and biogas production, but also to create a good, solid, diversified market for those products too. This is all new stuff. That's, like I said, that's why it's exciting to me.
Let's assume you're successful at getting over the finish line and you develop this liquid organic fertilizer business profitably. Um, and that's moving forward the way that you would hope. Bigger picture, do you still feel there's an opportunity for livestock for larger project livestock operations in the longer run? Meaning, is that still an opportunity, even though it's not been an opportunity because of maybe getting the timing too early? Do you still think it's something that could be the next iteration after this maybe bolt-on strategy takes hold?
Yeah, absolutely, Shawn. And that's good insight, because first of all, you got to understand that organic fertilizers, in our opinion, the organic markets will expand as product becomes more affordable. So the more we get into the market and the lower the prices go, the more adoption we think you're going to see. And that puts us in a position where we can grow with the market and with the demand. And again, I think it's going to take livestock, which we love because the waste streams are very concentrated. That's perfect for us. The less water we have to chew through to get to the same amount of ammonia, the cheaper we can produce that product. As far as the fertilizer industry, I think again, as we can lower our costs by diversifying revenue streams and expanding scale, everybody wins. Again, these fertilizers, the market demand is very price sensitive. We know there's that bubble of the very high value fertilizers like out in California where they're growing the specialty crops and those guys are paying 10, 12, $20 a pound for soluble nitrogen. We can substantially lower that cost. The opposite end of this of the spectrum is the row crop guys that can't afford much more than $4 or $5 a pound. How do we find a way to thread the needle between those two markets? Again, I think that as these markets develop, you're going to get answers to that. But right now, we think it's a really good place to be in that low cost provider position.
Obviously, in a pre-revenue company, Craig, like yours, which I deal a lot in, it's always hard to kind of try to put value and quantify and figure everything out. And so you have this technology. I think I read somewhere, correct me if I'm incorrect, that I think you invested maybe $100 million or so. How do you how is someone looking at Bion value the technology, try to get a value without having revenues and earnings to determine valuation? Is there, I think that would be helpful because obviously your stock market capitalization right now is something like 15 to 18 million or something like that. Seems awfully low given a technology that seems to be de-risked, that you've put 100 million or so in. Maybe you can go over your sense or your feel or your color about that.
Yeah, I think first I would point out that while we do have, probably 100, well, more than 100 million in accumulated deficits, about half of that, about 50 million is probably cash, the rest is non-cash items. So yeah, over 30 years, we've invested 30 years in, or excuse me, 50 million in a technology that's on its third iteration. I think it's de-risked more though from the standpoint that we have now operated a small commercial scale system for 2 years. I'll show you a picture of this thing. You'll have to bear with me, but it's not a toy. This is a $10 million small commercial scale system that produces ammonium bicarbonate. And this is really the result of those 30 years of R&D that really, I believe the company became a new company. And really the valuation should restart about 3 years ago when we proved this thing, or when we started to really prove that this thing works and does what we said it does, or said it will do, and at a price really that is even better than we thought. The economics are working out better than we had hoped. So clearly there's a robust market for the products. There's a robust need for the, for the need to solve, these ammonia problems. And, our technology is sitting in the middle of that now performing better than we had expected.
Craig,
The,
I
the,
don't see the picture on my screen of the apparatus. I see
oh, I
maybe.
apologize. I didn't go,
Oh,
I
there it
needed to
is.
go one
There it is.
more. Yeah, sorry about that. I was
It's
showing you our
okay.
capital restructure. But at the end of the day, yeah, this is the system. It is a big still. We have an evaporator, a condenser, and a distillation column. But instead of distilling whiskey or vodka or whatever, we're distilling ammonia. These are technologies and processes that have been in use for hundreds of years or for 100 years. Anaerobic digestion has been around for over 100 years. These are well understood processes. And what we've done is just, combine them in a way and really focus it on bringing ammonia out of that digestate. So there's a lot of proprietary enhancements to that platform that are now proven and optimized and ready to go. I mean, we are about to start our first true engineering report for this big Kimmeridge project. This system again has proven itself. Its economics are better than we'd hoped. You're going to be seeing and hearing a lot more about this. And you and I talked about this earlier, Shawn. Timing is the key. You got a company that's been beat up. You got a company that went through some real challenges and has emerged out the other side with the technology. And really, we checked all the boxes. We've hit those milestones on this technology. Now it's just a function of putting the supply together with the demand. Our we're not 100% de-risked, but I like the way you put the fact that we have de-risked it as much as we can at this point. Now it's just a function of putting it in play at full scale. And again, it's a still. We know how this stuff works, and we know that these types of processes work better at larger scale. We think our costs are going to go down. And in fact, we're quite certain our costs are going to go down. And we're actually working on some new configurations that we know will drive the cost down dramatically, both on the CapEx and the operating side.
Has anyone put out numbers on what the size of the organic liquid fertilizer business industry could look like? I mean, is there anyone that's tried to take a stab at it of, if you provide a economical equivalent efficacy type of fertilizer product, anyone put down some estimates of what that size looks like?
There's some folks, again, there were some folks that thought that they would be able to produce these products. They spent a lot of money. BioStar is one of them. They were using citric acid, but they spent a lot of money. They were one of the earlier pioneers in this. They had a product called Super 6. And there's a lot of estimates out there. The one that we choose is kind of in the middle. We think that the specialty market in California at current pricing is somewhere around 25 million pounds of nitrogen, which, call it 30 million gallons of a 10% solution or so. We're very certain of that. It's a bubble though, and it's a limited market. We think again we can expand that market as prices come down. Um, then you drop down to the row crop markets. There's clearly several million acres there and several million pounds of demand, but that will grow quickly as prices drop because that is even more sensitive than the specialty crops. And by specialty crops, I'm talking about the guys growing the berries and the peppers and the stuff in California that, not only are we helping them with that yield gap, don't forget, if we increase that efficiency, we're also lowering the carbon footprint of organic. And that's an
Yes.
important point to remember that we really bring both those benefits.
Um, and lastly, um, when you look at the current valuation, um, what do you attribute the current market's obviously negative outlook? Um,
I think they're still waiting to see if we're going to pull it off and survive, Shawn.
yeah,
I mean, seriously, it was a near-death experience. Our stock got as low as 4 cents. Everybody assumed I was going to turn the lights out and walk away.
yeah.
And that the rest of us were too. And not only has our full team stuck with us, but we've added some real talent and have some real depth now. And one of the things that we didn't really talk, I didn't talk about, I probably should have addressed it, but there's some real interesting upside here besides the ag markets. It's no secret that particularly for youth sports fields and schools and golf courses and places where people recreate, that there's a push towards a more natural approach to managing those types of environments. And you're seeing more and more organic in home garden and lawn use, in those institutional opportunities like for city parks and recreation. And we think that we're just starting to scratch the surface in those markets. We don't have any idea how big they are, except that they're massive. We don't have any idea what the cost structure might look like, other than the fact that there seems to be an increasing demand in that space for these natural products. So that's another what I call some upside. And, to me, again, I think as soon as Bion gets to where the street understands that we are clearly moving forward with our first project and that it's funded and that we have partners and that the money is there, I think the stock increases pretty quickly. I don't know where it goes. Your guess is as good as mine,
Yeah.
Shawn. My crystal ball is pretty cloudy. But at the end of the day, you got a market cap right now of about $12 million. If I've got a 25 or 30 million pound market out there and I can make a couple of pounds or a couple dollars per pound selling 10, 15% of that market, when I know I'm going to get a higher number than that just because there's so few players,
Yeah.
we're undervalued. There's no question about it. Timing is everything on these deals. And we took a big hit. We've really, in my opinion, checked a lot of boxes here and hit a lot of milestones. The last one is, can we get funded?
Yeah.
And frankly, I think we can. Our opportunity and our value proposition are too big for these guys to ignore.
Well, I always say that if you didn't think it was possible, I don't think you and your team would be spending their days getting up every morning and spending all the time to push the ball forward if you didn't think there was a reasonable outlook for getting this over the finish line. And so I commend you on making it through the valley of the shadow of death, as I say,
I'm
because those are never fun
going to
experiences.
use that. I'm going to
But
use that.
we've all been through them in different ways in our lives. You know, that very dark time when it could have, when you have to make a decision, and obviously, you and your team made the decisions you made, and I'm certainly really blessed and gratified that you spend this the time on this call today. I think those my subscribers that listen will get a really good read on a really good opportunity. And obviously, everyone has to decide for themselves, whether this is something for
Right.
them. But it's a very unique opportunity and something a company I follow for a very long time. And I think that the timing, you know, might finally be right for Bion. And so I'll give it to your final hands. To any closing remarks, any final things that you would like to say before we kind of button up this interview?
Absolutely. There's one that again, you hit it on the head. If you didn't bring it up, I would, and that is timing is the key on any of these. And clearly, we are on. You don't want to buy when it's up. You want to buy when it's down and getting beaten up before it goes back up. And I'll just close with this. If you look at that memorandum of understanding with Kimmeridge, you'll see that they demanded a right of first refusal on 10 million shares. It's at a premium to today's market. There's a message there. This is a very sophisticated, large, well-resourced investment private equity firm. The fact that they want that ROFR tells me a lot. They're looking to grow with us. And, you got to understand private equity seldom invests in deals at more than 5% because they don't want to report when they're selling.
Yeah,
10 million shares would put them over 10%.
yeah.
They're not worried about having to report whether they're selling because they're not looking to sell anytime soon. I think there's a great opportunity here. Again, timing is the key. That's how I'd close.
Thank you, Craig. I really appreciate it. I want everyone to remember and be clear that I am not getting paid by Craig or Bion. I have no economic relationship. This interview is being done because I think this is a good opportunity. There is no advertising, there is no income coming in for me in any way by putting this out there, other than for the betterment of those of my subscribers who might find this as an interesting opportunity. But I want to be very clear. There's no financial benefit for me other than to obviously help those make an investment that maybe turns out really, really well in the long run. With that being said, thank you, Craig, for this time, and we'll keep watching your progress, and we'll stay in touch.
I appreciate that, Shawn. Thanks for the opportunity.